All right, guys, let's talk about what is on everybody's mind, and that is cryptocurrency. The crypto casino is crazy right now. We are experiencing all kinds of record highs as well as record lows, which means that if you timed it right, you buy in at the low and you sell at the high, and voila, you've just doubled or tripled your money. And you're like, what do I do with all the gains? What do I do with all this extra money? And then when you sell that cryptocurrency at the high and you make all those gains, how do I not pay these taxes? That's a great question. That is a great question, because in today's video, we're going to answer that. How do you avoid your crypto gains using real estate? All right, guys. If you're brand new to this channel, please hit that subscribe button, because we release new videos every Monday and Wednesday here at the Hoan Zone, designed to help you multiply the assets you own. Let's get into it. Owning real estate to help offset the cryptocurrency gains that you got because you timed the market correctly. Now, I'm not saying to go time the market, because that's very hard to do. A lot of people try it, and every once in a while you win. And for those who've won, I want to celebrate you for being a winner. Fantastic. The reason you won is because you took action. Most people don't take action, so I congratulate you for that. But now you're trying to think bigger, you're trying to think more long term, and you're trying to be smarter and more efficient with your money. And the most efficient thing to do with your money is to try to avoid taxes legally. Try to avoid taxes as best as possible. That's being efficient with your money. You have X amount of dollars. You want to keep as many as you got, right? You want all of them. You care for them. You don't want to give it away to Uncle Sam. Uncle Sam didn't help you time that market. You did it. If you buy real estate kicks off something special. And that special thing is called depreciation. Depreciation is an Uncle Sam gift, where it says that you get to write off against your property this thing called depreciation, which is like a magical expense because you don't actually have to pay for it. Unlike when I take my business trips to Hawaii, I have to actually pay for that business trip with my money. Then I get to write that off because it's business expense. Depreciation isn't like that. If Uncle Sam says, Hoan, because you bought a $275,000 house, you get to write off $10,000 off depreciation, I don't actually have to pay the $10,000 for that depreciation. And let's say that I had an expense. Let's say my toilet broke and I had to spend $1,000 fixing the plumbing, right? I get to write off that $1,000, but I had to pay that $1,000. Depreciation, if I have a $10,000 depreciation for that $275,000 house, I didn't actually have to pay that $10,000. Do you guys get the difference? You guys get the difference? That's why it's magical. So for someone like me, who's a real estate professional, that is actually a term. It's not just like, he's a professional. No, that's like a tax designation. Because I am a real estate professional, I get to write off my depreciation against things like my cryptocurrency gains. I even get to write off things like if my wife had a job, she had a W-2 income, and I'm a real estate professional, my passive losses from my depreciation could actually offset her income, her gains, her W-2 income. That's a fantastic thing, right? But it requires you being a real estate professional. What does that mean? That means you putting in 750 hours into real estate, and that being your primary income generator, right? Talk to your professionals. Talk to your tax professional. Ask him or her about real estate professional. See how to qualify, and then do that. Your job is to make more money and then also to be tax efficient, right? When we're just starting out, we want to learn how to gain more money, right? But once you get to a certain point, you want to learn how to keep that money. Start thinking about that now, though. And if you have that cryptocurrency gain, fantastic. Just keep on figuring out how to be more efficient with it. Now, here's another way. Here's another cool thing that allows you to be efficient and how to keep more money. If you weren't off with your timing, you were off with your emotions, and you bought here, it went to here, and then it went down to here, and you said, I don't want to lose any money, and then you panic sold, and you sold down here, but you bought it here, right? You sold down here, you bought it here. Well, that's a loss. What you get to do, right, because you're uncertain, right, you could sell it actually here. You take that loss, right, for this one coin. Let's say this coin was Dogecoin, right? You take that loss here, but another coin went up. Let's say you also bought Shiba Inu, right? And you bought the Shiba Inu coin, and that went up, right? And you sold up here. So that had a gain. The Dogecoin had a loss, so you sell it and you take the loss. But you still have that dream of that $1 Dogecoin, right? So you bought it here. Let's say that was at 50 cents. It drops down to 40 cents. And you're like, that's going to zero. I'm selling. But then you were like, no, you know what? I think it's going to come back. Sell it and then buy it right back. The nice thing about cryptocurrency is they don't have the wash sale rule, which means that with stocks, if you buy and sell, you have to wait 31 days before you can actually claim that loss. If you buy it and then sell it and then buy it back immediately, they're not going to allow you to take that loss. But cryptocurrency, you get to account for that loss. You buy it back the very next day and then you just hang on to it. You just hang on to it. So what's cool is your position never changed. You bought it here, it dropped to here, you sold it, you locked in that loss. And then you bought it right back the very next second. The price didn't change yet. You bought it right back. Your position never changed. You're still in the same position, but tax-wise, you now have a loss. And then you hang on to it, and that loss can offset the gain that you got from the other one that actually won, right? And then you hang on to the Dogecoin, and then maybe that Dogecoin does go up or whatever. It goes to the moon, right? It goes to that $1. Great. You choose to sell it. You now have a gain from here to here. You have that new gain. And again, what do? You buy the real estate. You take the depreciation. That is how you are efficient with your money. That is how you multiply the assets you own because you are efficient. You don't pay more in taxes than you need to. Cool little tricks like that will save you a lot of money when it comes to dealing with the IRS. Now, if you don't have any capital gains and you still want to be a real estate investor, what do? What do you do? Well, you buy my course, of course. You go to hoanzone.com, you check out my store, and you buy my course called Where's the Money? And in that course, I show you guys how to find different sources of money so that you can buy as much real estate as you want. People, when you don't have money, you often think, oh, I need so much money to make money, right? Money makes money. We all know this, right? But it doesn't have to be your money. And as you start to learn that, there are two types of money problems. Most people don't have enough money. And then there are some people who have too much money and they need to put that money somewhere. Your job, figure out who has too much money. And then you take that money and then you go and invest that into the properties that you want. And that's how you multiply the assets you own. Right? So get that course, Where's the Money? But if you did time it correctly and you got all that money, then go buy more real estate. You guys see how this works? You guys see how that works? Did any of these tips help you? Did any of this help you at all? If you guys liked any of this, please comment below. I want to see what you guys are doing. How are you guys becoming more tax efficient? How are you guys keeping more of that money that you got from all this cryptocurrency action? Timing is really difficult, and crypto is like this every day. Sometimes it swings like 50%. Like that's not happening in the stock market. But if you play the game right and you watch those charts or do whatever it is that you do, I'm more of a real estate guy than a crypto guy. I call it the crypto casino because that's what it is. It's a casino, crypto casino, right? I'm more of a real estate guy. That's where I'm creating cash flow. But you know, who doesn't like betting, right? So put a little bit in there, and if you watch those charts like you guys do and you claim that you guys can predict what it's going to do next and you do it right, great. But definitely do something with the money. Put it into real estate if you need to, because that will help you continue to multiply the assets you own. And also, it's a good way of diversifying because crypto is like this, real estate's kind of like this. Do both because it'll help you a lot. Sell on the dip. But if you do sell the dip, buy it right back and take the loss. That's a tax tip that not too many people share. So don't worry about it. All right, guys. Hopefully you enjoyed this video, and I will see you guys in the next one. Peace.